pre-report estimates that are out.
Yeah, okay.
For U.S. ending stocks, world ending stocks.
Yeah, 16, 17 is what everybody's looking at anyway, you know. So.
Right. Did you catch that, John? Well, thank you for joining us here on a Monday. I'm Marlon Bowling with you, and we are going to be taking a look at your early trading in the grain and livestock markets. This time with a little extra help. We have Dewey Strickler on the line. He's with AgWatch Market Advisors. He's based in Franklin, Kentucky. So let's go to the phones right now. And Dewey, thanks so much for joining us here as we kick things off in a brand new trading week here. I wanted to get your impression first off on how things are doing where you are. I happen to notice in Middle Tennessee over the weekend, I happen to see a cornfield, and my goodness, the corn was 6 inches tall already.
Yeah, Marlon, it is. We're having some real good weather here, even though we're about almost 5 inches behind in moisture. It seems like the rains that we've had have come at ideal time, and corn is just really growing like a weed.
Absolutely, and sounds like more rain on the way this week. So hopefully the guys have a chance to sneak the corn and soybean fields in there in between showers and take advantage of that good moisture out there. Dewey, let's take a look at the early trading on the futures board here. We'll see how things are opening up here this morning on the corn and soybeans. We'll go to the corn first of all and look at our futures trade. We'll see if we're opening up higher or lower here this morning. So first up, we have the corn on the July contract down under a little bit of pressure, a penny and a quarter lower at 376 and a quarter. December, a penny and a half lower at 383 and a quarter. Now that is in advance of the reports coming out tomorrow. Again, I'll remind everybody we get the crop production and supply and demand reports tomorrow from USDA at noon Eastern, 11 a.m. Central Time. On the soybean trade this morning, we'll switch over there, see how it's starting out today. We have July currently up half a cent at 10.35 and a quarter per bushel. November up a quarter of a cent at 10.22 and a quarter per bushel. So very quiet trade to start things out here today in advance of the report. On the wheat side, July Chicago wheat now down 2.5 at 4.61 and a quarter. And on the Kansas City market, we have July now down 5. Really getting hurt there. 4.48 and a half per bushel. In the Minneapolis spring wheat trade this morning, we have July there down 1 3/4 at 5.33 and a quarter per bushel. Dewey, I wanted to get your thoughts on the pre-report estimates that have been coming out. We have some numbers on U.S. ending stocks. It looks like for the 2016 and 2017 marketing year. Well, this is actually the world ending stocks here. That would be 210.4 million metric tons, what the trade is looking for. Soybeans at 73.4. The wheat is at 243.6 million metric tons. This is on the world carryout. So how do you feel about those numbers? Do you agree with that?
Yeah, I think pretty much so. I think that traders are going to be looking basically at two numbers. They're going to look here at the 2016, 17 stocks, obviously, as far as the world stocks are concerned. And they're also going to be looking at the 15, 16 stocks here as well to see whether the USDA plugs in some reductions here in South America's corn and soybean crops. As far as the U.S. Domestic numbers, no one's going to pay much attention to the 15, 16. They will be looking at the 16, 17, and probably when you're looking at the corn number as high it is, it's really an old number, and the report's not even released yet.
Yeah, all right. So we're looking at the U.S. ending stocks for the next marketing year. That's a crop that is just now emerging out of the ground here in the U.S. Corn, 2.2 billion bushels, and it looks like the soybeans, the average guess is about, looks like that would be, well, let me look at this. On the soybeans, it should be about 427 million, I believe, for the 2016 and 2017 ending stocks. It looks like on the wheat should be 991 million there on the U.S. ending stocks. So they're also going to have estimates for production in the U.S. And it looks like on the corn, they are looking for 14.15 billion bushels for the production coming off of this crop. Soybeans are looking for 3.78 billion bushels. So that is the average trade guesses that we're going to be working off of for tomorrow's reports. Again, they come out at noon Eastern time and 11 o'clock Central time. We're going to pause for a little break here, Dewey, and I want to bring you back and we'll take a look at the livestock trade to see how it's opening up on a Monday right after these messages. Come on back. Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you. I'm joined by Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. And Dewey, let's take a look at what to expect in the cattle and hog markets today. We had a firmer cash cattle trade that developed in the plains last Friday. And it looks like on a dressed basis, we had a market that came in all the way from $195 to as much as $200 per hundredweight, and that was $1 to $5 higher than what we had the previous week, apparently. And on a live basis, it looks like the sales were about 126 to 129 Friday afternoon, reported by USDA, and that would have been anywhere from $2 to $4 higher. So, Dewey, that looks like that is leading to a higher start this morning on what's going on with our futures trade as well. You said you were kind of surprised to see our live cattle futures opening up as firmly as they are here today.
Yeah, that's right. We gapped up higher here this morning. I think it's a couple of things. Obviously, you've got packer demand for Memorial Day. You have lower steer weights. They were down about 8 pounds. But the thing I'm looking at on the cattle right now, we opened up just right square on our high here at 123.72. We better take that out pretty quickly or you're going to see some backpedaling.
Really? Okay. So right now we're $2.50 higher on the June. As you mentioned, we're now at 123.22 per hundredweight. So we came off of that early high by about $0.50 already. On the August live cattle, we're now quoted at 119.80 on the last trade. That would be up $1.90 from what we had on Friday's close on the August live cattle. October is trading at 174 even, well, 174 to the plus side at 119.12 right now. December up $1.82. So good, strong, firm gains all across on the live cattle side here this morning, triple-digit gains. Supported by that strong cash cattle market that we had late on Friday. Meanwhile, on the feeder cattle side, we'll switch over there, Dewey, and look at these gains. My goodness, we have the August contract now $3.13 higher, and it's trading at 150.30 on the day, and even that is about $1.50 off of its earlier high already. So this must have been an extremely volatile opening here on the feeder cattle trade early this morning.
Yeah, you guessed it. That's exactly right. We did gap higher on the feeders here, shot up on the August to 151.67, but the market is starting to back off here. We need to see it turn higher. We're going to go down and fill the gap.
Any idea why they would jump on the feeders and run them up so fast today?
I think it's just because of the fat cattle market.
All righty. The packer margins these days, how are they running?
Well, packer margins, they're running fairly, decent here, and they're obviously trying to get some cattle bought here to go through the Memorial Day weekend.
All right, let's take a look here at our lean hog trade. See how it's starting out here on a Monday morning. Wow, kind of narrowly mixed here, Dewey. It looks like the May is up a dime. We have June now 7 cents higher at 81.35 per hundredweight, and that has already backed off of its high by $0.50. July lean hogs at 82.35 per hundredweight would be up just a dime. August actually down 4 cents, so they're not going anywhere very fast. But this is following a pretty weak close that we had on Friday in the hogs. So do you think this market is going to be tentative today?
I think it could be. I think the factor really supporting the hog market right now has, of course, been the recent buy-in of pork by China. So far, this setback from just around 83 on the June hogs looks to be more of a correction technically. So that being said, I can't rule out the market getting up past that 83 area again.
Really? So you see that as overhead resistance then in your opinion?
Yes, I think so.
Okay, all right. We'll keep an eye on that. What about support?
Support's obviously going to be right around those recent lows last week of 81.
All right, very good. Thanks, Dewey. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Always a good guy to talk to, so things just getting off and rolling today.
All right, much more to come as the day goes on, of
Absolutely.
course. Thank you so much, Markets Editor Marlon Bowling. Several young ag professionals have dedicated a year of their life to serve as ag teachers in junior and senior high schools in developing countries. It's through AgriCorps and the mission